The business of forecasting any future, let alone the future of the economy, is a nearly impossible task. So pity the central banker trying to make sense of an economy full of contradictions. It may seem counterintuitive, but the U.S. economy is doing pretty well. GDP numbers show the U.S. is grinding out slow but steady growth. Unemployment has fallen to historic lows, and the stock market's in the midst of its longest expansion ever. The Fed cited global trade issues and lower than expected inflation to justify the cut. But many suspect the real reason is this man and his sustained criticism pressuring the Fed to cut rates. Today, the chair of the U.S. Federal Reserve, Jerome Powell, made clear the Fed does not play politics with policy.
We also don't conduct monetary policy in order to prove our independence. We conduct monetary policy in order to move as close as possible to our statutory goals.
While Powell bristled at the notion that he was appeasing Trump, markets plunged, signaling they felt the Fed didn't cut enough. And of course, President Trump took to Twitter. As usual, Powell lets us down, Trump wrote. We're winning anyway, but I'm certainly not getting much help from the Federal Reserve. The contradictions in the economic data combined with the political pressure put Powell in a tough position.
On the one hand, we have this paradox where unemployment is really low, but wages and prices are not coming up very quickly. And on the other hand, we have this nearly unprecedented political pressure from the White House that's trying to shape their decision making.
Both Canada and the U.S. are looking at largely the same data, worried about the same things. But Canada did not raise rates this month, convinced the economic data simply didn't warrant a move. Peter Armstrong, CBC News, Toronto.